Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sontu. This is Fintech Daydreaming.
Hello and welcome back to a regular scheduled programming of Fintech Daydreaming. My name is Ville Sontu. I will be your host for today's episode. And as always, I'm of course joined by my good friend and co-host, Paul. Paul, how is the winter treating you so far?
I'm going to make a rule for this season. We will not discuss the weather at all under any circumstances. The weather is what the weather is, and it will no longer be a topic of interest for us to cover. Although as a Brit, I do know that I have to discuss the weather, but we will not be discussing the weather. Instead, what I'm going to cover this time is I realized that I've been living now in this new apartment of mine for close to 6 months, and I still haven't figured out what to do about the background and the Fintech Daydreaming sign like you have with the blue light around it this time, which is looking very fantastically smart. I used to have the one in my house that was hanging behind, and I can't quite figure out what to do it here. The distance to the back wall seems to be a little bit too far, so I need to figure something out. I need to keep the branding, and this time we need to get our hoodies sorted out sooner rather than later, because whilst I am a big fan of Modi Forum, maybe I've advertised it a bit too much these days on our podcast, so that's because I like the hoodie. We need some of our own hoodies. And I'm wondering how many of our guests would like to have a Fintech Daydreaming hoodie.
Yeah, I think we need to figure out the hoodies. A couple of things. First of all, winter is a state of mind, not a weather. I mean, everybody who watches Game of Thrones knows that the winter is definitely something more than just weather. But that aside, I think we're both sponsoring things here today. So again, I'm wearing my Patriots jersey because I just watched the AFC finals last night, and the Patriots are finally back in the Super Bowl, which is fantastic. So I need to promote my favorite NFL team for a bit.
Yawn. That is so fintech related, isn't it? Yes.
Yeah. But remember, I mean, a throwback to the very first episode that we did of this podcast, and I did mention that I'm a big Patriots fan. So again, anybody who's been listening from the episode 1, welcome back, and thank you for sticking with us all these years.
And also to your comment about winter being a state of mind, ever since I moved to Finland, I keep getting reminded by you Finnish folk that apparently there's no such thing as bad weather in the winter in Finland. It's just bad clothing. And it doesn't seem to matter how much clothing I put on. It is still bloody freezing cold. So I'm sorry. No, right. I believe you've got a secret gene that keeps you stable in this country during winter.
Indeed. But hey, enough chit-chat, enough about sports. Let's get on to the topic of today's episode, because we have our first guest of the year joining us. Again, the first episode we did was the Nordic Fintech Highlights, and now we have a proper episode coming. And what a guest we have. Like we promised in the last episode of last season, we will be bringing back some of the stars that we had on our podcast that we recorded at the Nordic Banking Summit. Nordic Banking Forum, I was supposed to say. And the first one to rejoin us is, of course, Aleksi Grym from Bank of Finland. Good morning, Aleksi. How are you?
Yeah, good morning. I'm really good. Thank you very much.
Thank you for joining. And on this Monday morning where we're recording, of course, this will be released later in this week, but really good that you could join us. So, Aleksi, let's start with the basics. So again, who are you, why are you here, and how did you get here?
Yeah, I'm Aleksi Grym. I'm now head of department at the Bank of Finland, so head of the payment systems department. For many years, I was head of fintech. So I've been working in fintech for many years. But recently took on a role at the bank, managing the whole department now, where fintech is also one of the offices.
Awesome. And for anybody who lives in Finland and even remotely follows banking or fintech, of course, you are a very familiar name. So hopefully you will be even more known after this, even outside Finland and the Nordics. Of course, you do a lot of speaking in conferences, so I'm sure your name is very familiar. with a lot of our listeners. But again, we will get to all the good stuff with regards to everything you published, everything we kind of started talking about end of last season. But there is one tradition that we always have to keep in the podcast in one way or another, and that is the fintech related joke. I believe, Aleksi, you do have a joke for our audience today.
I do have a joke, and I'm contemplating whether I just should go ahead and say the joke or explain. Like, of course, I asked AI for help. It's obvious,
Yeah.
but actually, all the jokes that AI came up with, and actually tried both Copilot and ChatGPT, and they came up with pretty much the same jokes, by the way, which is an interesting observation in itself. But they were really bad, so I'm not going to do any of them.
Okay.
I'm just going to do another one, which is this. So how do you know someone is working in the blockchain industry?
Oh, they will tell you, I guess, the same as vegans, or?
Exactly. Don't worry, they will tell you. Yeah, so it's an adaptation of the vegan.
Sorry, I didn't mean to ruin your joke, but it just immediately occurred to me that, of course, they will tell you. Yes. And it's even worse if you're a crypto bro flavor of the blockchain industry, of course, because then they will also hook you in to their whatever investment scheme seems to be on top of their mind at any given time. But that's actually a very interesting lead into many of the discussions that we're going to be having during this episode, I hope. But before we get into all the fun stuff with blockchains and cryptos and central bank digital currencies, I mean, let's move back a little bit. I mean, when I got to first know you professionally, Aleksi, it was you were the head of fintech, and now you're head of payment systems. This was I guess a larger responsibility, but also seems a bit boring compared to head of fintech, right? I mean, does it mean that you're not in charge of payment systems? Does that first of all mean that fintech is mainstream, or is that just the boring stuff won over all the excitement of the fintech scene?
I mean, so first of all, there's not much drama here. It's simply that our previous head of department is retiring, and the position became open, and I was then appointed as the new head of payment systems. But we had fintech within the payment systems department, which is a reflection of maybe the fact that fintech, when we started this function 8-9 years ago, we covered every area of fintech. So you had investment, you had all sorts of fintech applications, but of course, payments has become one of the biggest and most important segments of fintech, and also from our perspective, that's maybe the most interesting one, and that's why we positioned the unit that is researching and doing policy in fintech within the payment systems department. So it kind of made sense to put it under that. So the fintech unit is still there. It's just that now my first job as head of department is to find a new replacement for myself. So a new head of fintech, and that process is ongoing. So fintech is definitely, it has become mainstream. I think one indication of that is simply the fact that central banks now have these units. They do have fintech units. It's become permanent. Initially, it was more seen maybe as a project or something that might change or go away. But now I think there's recognition that fintech has become a permanent part of the industry, and that's why also central banks have fintech units. And I've been head of the fintech unit for many years, and now as our head of department is retiring, I'm taking over the entire department. So it includes many other things beside fintech. It includes banknotes, for example, which is really interesting. It includes payment security oversight. So one way to look at the department is to think about, we have old money, which is banknotes. We have existing payments and existing money, which is all the existing payment systems. And then we have future payment systems, and that's kind of the fintech part. So now my job is to cover that whole area.
I actually have a slight derailment on this. As Ville knows, I have a tendency of helping all of our listeners a little bit. And Ville and I both have a tendency of suffering from the curse of knowledge. We've been in this industry for so long. And I know, at least for me, I've got a couple of family, relatives, and friends who listen to the podcast, and they maybe don't know that much about fintech and banking. So just very quickly, and as a lead in, Aleksi, if you could help. We all have banks. Everybody knows what banks are. But then now we're talking about the Bank of Finland, central banks. Maybe just very quickly help our not so educated listeners in the banking world. What is the difference between the banks like Nordea and Barclays and Lloyds, and then a central bank or the Bank of Finland?
Yeah, no, that's a good question. I've also seen that it's not clear to people generally. So a central bank, one way to say this, the central bank is a bank for banks. So we have as our customers banks like Nordea and so on. So they have accounts at the central bank. A central bank is also a public institution. So it's not a private entity. It's not a corporate entity. It's a public institution. It's overseen by the parliament. I think it's the same pretty much in every country. It has many functions as a bank. So one is to have these accounts for the commercial banks like Nordea and to facilitate payments between them. So if Nordea needs to make a payment to Aktia, for example, then we operate the payment system for that. We have the accounts for those two banks, and we make that payment happen. But we also issue the currency of the country. I'm speaking as any central bank in any country. So we issue the national currency, which in our case, of course, is the euro. So we issue the banknotes. That's the kind of fundamental currency that we use. And then we do policy work. So we have different regulatory tasks related to monetary policy, financial stability, payment security, and so on. So that's really the kind of overview of what a central bank does.
That's an interesting lead-in, of course, into the discussion about central bank digital currencies that we'll cover soon. But before we get there, I mean, Bank of Finland, again, the Central Bank of Finland, then Finland is part of the European Union. And then, of course, we have the European Central Bank, the ECB, which is predominantly in the context of this conversation working on the digital euro. What is the relationship between the Bank of Finland and the European Central Bank? Who gets to the final say on what's going to be happening in the policies in Finland, for instance?
Yeah, another really good question. I'm really glad we sort this out. So the European Central Bank is owned by the national central banks. So the way we usually describe it is that the central bank of the Euro countries, the Eurozone. So we have 21. We now have 21 because Bulgaria just joined a few days ago. 21 Eurozone countries. Our central bank is called the Euro system. So it's actually a system of central banks. We have the ECB plus all the national central banks. And now, when I just described what a central bank generally does, it generally issues banknotes, it generally manages monetary policy, financial stability, and payments. Some of those functions have been kind of pooled together. So all the Eurozone national central banks have taken some of those functions and decided, let's have one entity do it for all of us. And that's the ECB. So the ECB does some of the functions of a typical central bank together for all the national central banks, while other tasks are still being done on a national basis. So it's literally actually our subsidiary. So the ECB is a joint company owned by all the national central banks. Now there are more dimensions to this. There are more regulatory and kind of there's legal things involved. So there is some direction coming from the ECB towards national central banks, mostly in the area of monetary policy implementation. But decision making is done collectively in the governing council, which is which includes all the national central bank governors. So it's really a collective decision making system.
Interesting. clarification, of course. And one thing you also mentioned is that your customers are banks, which means that the banks have their accounts with the central bank, and then they do basically settlement between each other when they need to move money across bank borders, so to say. But one distinction there is that I'm not a direct customer of Bank of Finland or the ECB, so I can't have an account with the ECB or the Bank of Finland for now, and that's a kind of foreshadowing a little bit what we're going to be talking about in terms of.
I know where this is going.
Yes, indeed. But before we get there, because I really want to kind of spend time with the central bank digital currency topic, we do have to address the elephant in the room, which of course is the cryptocurrency and blockchain space. And the reason I want to do this is because I want to park this discussion and I want to make a clear distinction between central bank digital currencies and what's happening in the private side of blockchain and digital currencies. So we're at the middle of another, I would say, hype cycle or peak of the hype cycle, or at least close to peak of the hype cycle based on blockchain and digital currencies and cryptocurrencies specifically. I remember, Aleksi, when I was in 2021, I was listening to one of the Finnish podcasts called Rahapodi or Money Pod in English. And you were back there in the middle of the pandemic 2021, and you were as a guest, and you were kind of explaining the ongoing hype about Bitcoin and all these cryptos and what is the Bank of Finland stands into it. And you were really kind of the voice of reason. You didn't kind of say that it's a bad thing necessarily. You're just kind of waiting for the use case to appear, and if there's anything that actually is worth having in this new blockchain-based ecosystem, then great. Let's see what happens. Of course, the crypto people took that interview a bit negatively, I would say, of course, because they didn't get the kind of full-throated endorsement of cryptocurrencies from the central bank. So, but again, coming back to this, now we are in 2026, and even despite the fact that we had multiple crashes and all these scams were busted when it comes to cryptocurrencies and blockchain on the private side of these conversations, we're again nearing the peak of hype, and the prices are still up. And now we have new things like stablecoins and tokenized deposits. I mean, from your perspective or the Bank of Finland perspective, you choose. How do you explain this cyclical nature of this world, and what do you think about the current cycle where we're talking about things like stablecoins and tokenized deposits?
Yeah. I mean, markets are cyclical generally, so any market is cyclical, and I can personally feel the cycle very strongly because I get media requests all the time, and it really follows a cycle. if Bitcoin price goes up, I get lots of media outlets asking for interviews, and that now I think we're a little bit past the peak. There are not so many requests anymore. But I think the current cycle probably has to do with Trump, with the U.S. elections. So Trump is very pro, or let's say the Trump administration is very pro crypto, and there's probably a lot of financial support behind it. So that probably explains part of the reason why there's a upcycle right now, or at least we're kind of past that peak right now.
What do you see as being the sort of general consensus and feeling in the Finnish market? I know there's been an awful lot of explosions around the USD or the stablecoin based on the US dollar. Lots of discussions also here in Europe. But what do you see from a Finnish perspective?
Well, I see a divergence between talk and walk in a way. I mean, stablecoins are a very popular topic to discuss and theorize. Like, there are lots of conceptual discussions about stablecoins. And then when you look at the actual data and what's actually happening in the industry, in the market, there's really not much actual activity going on. And very often people are saying, okay, well, it's a future thing, like we're preparing for the future. It's not yet a big thing, but it will become a big thing. So there's kind of divergence between what people talk about and what's actually happening in the market, you can see it in Finland, but you can also, I think, see it in many other places. You go to any conference around the world. I think there's a kind of misalignment between how much hype there is about stablecoins and what the reality then actually is. And I think, generally speaking, I would say Finland is sort of very average in terms of crypto enthusiasm and stablecoins. Not a world leader in any sense, but also not a laggard. So kind of very average in that sense.
One of the things we keep on asking here in the podcast with regards to stablecoins is we started by using a quote from famous philosophers, the Backstreet Boys, which is tell me why, in terms of basically what is the use case for stablecoins. And we've had this question to previous guests as well, and we have a wide array of use cases. But as you mentioned, many of them seem to be more aspirational rather than something that is a reality or even realistically possible at the moment. At the same time, we're seeing like 90% of the volume is still in the crypto markets when it comes to stablecoin transactions, basically moving quote unquote liquidity between marketplaces. And then the 10% is just countries with weak currencies trying to get access to US dollars, give or take. Now, you just said that there's a lot of aspirations and there's a lot of hype here, but very little in terms of actual volume and numbers. Where do you see the potential use cases for stablecoins? I mean, realistically, looking at the what they do and how they work, what could people use them for?
I think, as you already said, we already know what they're using them for. The main use case, why they were invented in the first place, is still by far the most important use case. It's to facilitate crypto trading. You sell Bitcoin or some other coin and you get paid in stable coins rather than an actual payment, because it's simply technically easier for the exchange or the marketplace to do it that way. So in that sense, they're like casino chips. And I'm not putting any value judgment on this. I'm just saying the mechanics are the same. Like if you go to a casino, you buy casino chips because it's easier for you to play the games, all the different tables, and then get your winnings, and then you cash them out. And stablecoins work exactly the same way. That's the main use case. So we already know what they are designed for and what they are used for. This kind of second most important use case is, as you mentioned, moving money when it's difficult to move money using banks or kind of more traditional payment systems. So if you need to move money out of the country to evade sanctions, or you need kind of move money to an offshore location maybe, or maybe you just can't open a bank account, or for some other reason you can't use the traditional payment applications or payment systems, then you can use stablecoins to do that. But that's far smaller compared to crypto trading, of course. And now your question is, can I imagine some other use case beside those two? Yes, maybe I can imagine something, but why should I? We already have the answer. That's what stablecoins are for. They're already used that way. To me, the more important question is, how big can those two use cases grow, rather than can there be some new use case that we haven't thought of? I trust market economies that they will come up with uses for all sorts of resources if there's a case for it. It's not up to my imagination. If people feel that stablecoins can be used for something else, they will figure it out, and there will be a market, and there will be companies providing those services. But so far we've really only seen these crypto trading and then some more marginal payment use cases.
I suppose we can clearly say that from a European perspective and the ECB, the focus is a lot more on central bank digital currencies than on stable coins. So maybe it's worth us taking that shift and focus a little bit more onto the direction that the ECB is taking, and we here in Europe are focusing more on. How do you see the differentiation between the sort of traditional definitions of stable coins and the view that the ECB has got on the digital euro.
Okay, yeah. So here we have, an example of, digital euro, CBDC, the things that central banks are doing in terms of retail payments and stablecoins. I simply don't see them overlapping much at all. But they are often discussed in the same context, just as we did. But the digital euro is not being designed to be used on crypto exchanges for trading crypto. That's not where you can use the digital euro. The digital euro is being designed to be used in everyday retail payments when you go grocery shopping. That's the use case for the digital euro. The thing I don't like about the digital euro CBDCs generally is the term digital currency, and I think that's the source of confusion. Is that stable coins, crypto, they're sometimes called digital currencies, used as a kind of umbrella term for those. And sometimes the digital euro, CBDC, or the stuff that central banks are doing is kind of put into that same bracket, whereas I see them completely different. So the digital euro really should be put into the same bracket as Visa and MasterCard, maybe Wero, and some of these other retail payment services. So it's really a more retail payment service or payment method rather than a digital currency. I really don't like that term, digital currency, at all.
Yeah, and anybody who's seen me on stage knows that I'm completely agreeing with that statement. I am growing increasingly frustrated explaining that no, the digital euro is not going to be a blockchain-based currency. No, it's not a cryptocurrency. And no, you cannot speculate with the value of the digital euro. But that is very difficult conversation to kill because of exactly this, I would say, the naming of it and the understanding that a digital currency has something to do with speculative market value. Again, a bit annoying from a payment nerd's perspective. But let me try to tie the previous conversation about stablecoins and the digital euro conversation, and that is through the relevance of these things in the European context. So many times when you hear people discussing about potential euro-denominated stablecoins, that basically issuing a euro stablecoin on the public blockchains, and then saying that, well, we will solve the 24/7 availability and then the instant payment leg of the of euro transactions using this euro stablecoin, then of course the immediate comment is that we already have instant payments in Europe. Again, SEPA instance works great, especially for a bit lower amount transactions. You don't need instant payments. You don't really have these problems that these stablecoins seem to be solving when it comes to immediate availability of payments or receiving the money immediately, which is fine. And we will not get back to that stablecoin discussion, but let's apply this same criteria towards the digital euro. The digital euro, again, is a central bank digital currency that gets, in effect, allows people to have a direct connection to at least the connection to the central bank balance sheet rather than the retail bank balance sheet. But the day-to-day kind of problems that the digital euro seeks to solve seem to be already solved. I'm already able to pay instantly, as far as I'm concerned, as a consumer at the point of sale. When I go to a supermarket and I pay for things, I use my watch, I use my phone, everything works great. I'm able to send money to Paul if I owe him for a dinner or whatever. I'm able to send it instantly, again, using SEPA rails or otherwise. We don't have any of these issues. So what problem is the digital euro actually seeking to solve?
So the problem that the digital euro is seeking to solve is that at point of sale, if you go to a retail shop, you basically have two options. Well, I'm using Finland as an example. It's more or less the same across the Eurozone. Some Eurozone countries have their own domestic payment or card schemes, but let's get maybe into those a little bit later. But more or less, let's say you have two major alternatives, two major players at point of sale when you make a payment in a normal grocery store. You have cash and you have international card schemes. Those are the two main players. The international card schemes are non-European. So European payments at point of sale in a retail context are being facilitated by non-European companies. That's the problem that the digital euros is designed to solve. We already have one solution, which is cash, that banknotes, but that's declining. So it's becoming less and less a solution to retail payments. And in a way, you could say what the Eurosystem is doing is simply kind of maintaining its position at point of sale in retail payments. But as cash is declining, it's replacing it with a new product, with an upgraded product in a way. But the problem really is that we don't have European competitors in that market. And if there were European competitors, if one would emerge, let's say a private company, a commercial entity that would solve the same problem, that would be great. But so far, there's no, the progress has been quite slow, and that's why public institutions are stepping into markets and feeling that we need to provide a public solution to this problem. I know there are opinions that are saying we need a public solution anyway, regardless of how well the market is served by commercial entities, that there always should be a public institution also in the market. But I think that's a question of opinion, and their views differ a little bit. But I think the status quo right now is that we don't have any European player in the market, and that's a pretty serious problem from a policy perspective, which also explains why it's kind of the public institution that's doing something about it, because it's a quite big problem from a societal point of view and from a let's say a systemic risk point of view.
I think we should unpack that systemic risk just a little bit more, because to the general citizen running on the street that's living paycheck to paycheck and more worried about can I afford my carton of milk next week or not, do they actually really care whether they are using a non-European payment rail or service or not? And what is that systemic risk that we are trying to hedge against as the infrastructure?
Yeah. So the citizens and consumers don't need to care whether a payment solution is European or non-European. All they care about is that it works. And we as a public institution, our job is to make sure that payment systems work under all conditions every day. Regardless of what happens, you can make a payment. And right now, public institutions in Europe feel that they cannot fulfill that obligation. So in order for us to guarantee that you can always make a payment, we feel that we need to bring in a new system. We cannot rely on the existing ones. So in that sense, citizens and consumers don't really need to, and they don't, generally don't maybe perceive this problem as a problem. But that's why we have public institutions that are thinking about these kinds of risks. And to make it very practical, the risk that we're talking about, the systemic risk, is that, let's say there was a foreign president who would really want to have a piece of land from your continent, and they would say, give me that piece of land, otherwise I will shut off your payment system. That's really the scenario that we're talking about. That I'm going to be, we can be frank. Trump could say, you no longer can make Visa and MasterCard payments in Europe unless you give me Greenland. That's really the problem that's a scenario that we're talking about.
Yeah, I think that's the equivalent of the red button that people are talking about, but in a very different way. So again, they could really harm this payment infrastructure, and this is part of the narrative of the payment sovereignty or strategic autonomy that we hear often mentioned in context of the digital euro conversation. But let me look back to one of the things that you just said, which is that the public authorities, central banks, they don't see the private sector fulfilling basically the needs that we have in terms of creating a European alternative. But at the same time, we do have private sector alternatives in the market already, even here in Finland. in the Nordics in general, and Europe, there's many alternatives. You mentioned players like Vero, Bizum, and we have Mobile Pay and Siirto, of course, here in Finland. But what would then good look like? So what is the gap that the ECB perhaps is pointing towards that the private sector is not fulfilling that would be fulfilled potentially by the digital euro? Again, I'm trying to find what needs to be done in order to fulfill this gap.
So one clearly is that it should be pan-European. It should work in every European country. And as I mentioned, there are domestic solutions in some Eurozone countries. And for those countries, the problem isn't so bad. So you have 7 Eurozone countries that have a domestic card scheme, which is quite widely used, let's say in France or some other countries, Netherlands and so on. In those countries, the risk isn't so big because you have a third alternative, which is that domestic card scheme. But in 14 other countries, you don't have a domestic card scheme. So what we would want is to have in every country, every European country would have alternatives. Now, that alternative could be a domestic card scheme. It could be a commercial pan-European entity. Let's say Wero would grow maybe pan-European. It would really be successful. That would be great. Or it could be the digital euro, which is a public institution solution. Now, to me, any of those would be, would fulfill that goal of having an alternative. But as I mentioned, there are some views that we need a public solution regardless of how many commercial solutions we have. I don't necessarily feel personally that strongly about that argument, but there are people who feel that regardless of how many commercial solutions we have, we still need to have one provided by a public institution. That's partially also driving the project forward.
So without sort of exploding this and stepping right back to the beginning, and I'm going to make terminology uses here that we don't like using on this podcast, but someone could argue, but hang on, isn't that what we're trying to solve with cryptocurrencies and stablecoins? There's your answer. Now we've got a solution for facilitating payment and movement of money across the whole of Europe.
Yeah, and I'm going to provide an answer that you usually don't hear in this context. And that's, stablecoins and crypto, they provide an alternative from the point of view where you can store your funds, but they don't actually do anything about how to accept payments at point of sale. They don't, that's an area they haven't touched at all, and they're not really interested in bringing, QR payments to shops or, bringing a payment card. Whereas that's exactly the segment that the digital euro, for example, is trying to solve. Most of our effort is going into that area because that's really the part that where we're lacking strategic autonomy and where Visa and MasterCard are dominating the market. It's not the accounts. I mean, Visa and MasterCard do not provide accounts. You can get an account from any bank, any payment institution, any e-money institution. Accounts is easy in a way. What's difficult is payment acceptance, merchant acceptance. That's the difficult part. So crypto and stablecoins do nothing about merchant acceptance. They have nothing to offer in that area, whereas digital euro is precisely focusing on that area.
I couldn't agree more. We see the same exact conversation happening when it comes to these cross-border payments or remittances, for example. There's always this continuous focus from, especially from the blockchain folks, on the how to do the kind of ledger transaction between the countries, but then they tend to forget or gloss over the fact that, well, the transaction also needs to be usable at the end, at the other side of that chain, and that last mile is the most difficult one, and I think the acceptance is exactly that. How do you actually make that account or that value usable? And it's definitely an interesting discussion. Linked to this, and coming back to the digital euro a little bit. So the couple of weeks ago, give or take, we heard the ECB making an announcement, or being more specific about the upcoming pilot for the digital euro. I believe that the aim is to have a pilot available in a very defined scope by mid 27. So from a Bank of Finland perspective, what can you tell our audience about this upcoming pilot?
So I would say, just as with any new product that's coming to the market, you usually start with a pilot or kind of smaller scale market entry. So also in this case, the digital euro would be, we're now in the process of building it, kind of doing the actual software development and system development for that. So we should have the system more or less operational by mid 27 or so that towards the end of 27, we could start piloting it. And we'll start with the smallest possible environment where we'll try it out, basically. So we'll have a test group of users. We have a small number of merchants, a very limited pilot where we simply try the solution. It doesn't have all the features yet, but it has the most important ones. And then gradually, over the course of 2 or 3 years, the pilot would get expanded. More merchants would come in, more PSPs would come in, more users would come in, and so on. And then finally, that would then lead to a full-scale market entry. I think that's the idea, and I think quite standard process for new product development. Now, the limited pilot in the very beginning would be only done within the central banks. So it would be within the premises of the central bank. A merchant operating within the central bank would be central bank employees who would be the first pilot users. And then in the next step, which would be maybe a couple of years later, there would be also people from outside the central banks who could participate in the pilot. But that's the idea.
And I mean, the focus seems to be on point of sale payments, so being able to pay at the merchant. Let's say it's a cantina, or you're paying for lunch basically at Bank of Finland offices or something like that. But I guess the real question is that is this going to be real money? So I mean, are the Bank of Finland employees or the pilot participants, are they actually spending their real money, or is it just going to be fake money for the sake of pilot?
So in the initial pilot, it will be fake money. So it's not going to be real money initially. So the system will be the actual system, but the money, the funds will not be actual funds. And yeah, in terms of use cases, I have been emphasizing point of sale because I think, to me, that's the most important part of the digital euro. The pilot will also have person-to-person payments, e-commerce payments. But to me, those aren't policy-wise, kind of strategic autonomy-wise, quite as critical as point of sale. So I'm really looking forward to the point of sale part. So the time, or the point in time when you can actually start using actual funds, like real money, is when we have legislation in place. And so it requires legislation, EU legislation, for the digital euro, and that could be in 2029, perhaps. After you have the legislation adopted, then you can start using real money.
Okay, so it means you're going to get free lunches at Bank of Finland, or?
No, and actually, in Finland we have a way to pay for lunches. Anyone in Finland knows how things work here. You can get your lunch benefits, so it's probably lunches are probably not the most the best use case for the initial pilot. So it would be other stuff you can buy at the canteen, like I don't know, chocolate bars or whatever.
Yeah, I mean, I've been hoping to finally see some kind of digital euro merch. I mean, like a T-shirt that says the digital euro or something like that. So something to consider. But just putting it out there.
Yeah, great idea. Yeah, I'll put that forward.
Perfect. So again, we're almost kind of starting to wind up here, or kind of round it off. But I do want to touch one thing that we also discussed last year when we met at the conference, which is the fact that the Finland has already done this once, and you've written a paper about it as well. And this is the Avant Cash central bank digital currency that the Finland did already in the 90s, and of course famously shut it down. And again, I believe it's the first version of a real central bank digital currency in the world, even though it was based on chips, and we've seen different kinds of prepaid payment instruments, of course, being available everywhere. But I believe that a unique connection here is that this was really by the central bank on a central bank balance sheet. So again, just quickly, we've already done this now in the 90s with chips, but what's different this time? So again, has the digital euro learned something about what we did in Finland in the 90s? Should they learn something, and are they missing something? What do you think?
So I think we've learned, and I think the central bank community has read that paper and has familiarized themselves with the case, which I think is very good and very helpful. And that's the reason why I wrote it and why I've been presenting the case, because I just wanted to make sure that history doesn't repeat itself too much, that we actually get some learnings. But maybe I don't think we've learned enough from it. Maybe some of the key learnings, there could be more key learnings that could be heeded now that we do this project. But yeah, basically going back, what all of that was about is the idea that with digital technology, you can store monetary value somewhere and use it. Well, let's call it digital currency in a way. That was already, that idea is, goes back to the 1980s, maybe even longer. There might have been ideas of that already in the 1970s. But anyway, in the 1980s, they actually started building solutions for that. And in the 1990s, there were many companies in different countries building these solutions where the payment instrument of choice was usually a chip and PIN card, because those were also new technology. Before that, of course, payment cards were usually magnetic stripe cards, but these were chip and PIN. So you could store monetary value on the card. And of course, now this sounds kind of trivial, very familiar. This became electronic money. The concept of electronic money was born during that time. So you had, in the UK, you had a company called Mondex. In Germany, you had a product called the Geldkarte. What's interesting is that the Geldkarte was only discontinued last year. It existed for incredibly long time. Yeah. And for a while, actually, if you think about it, it's mind-boggling. But in Germany, you had the old Geldkarte existing in parallel with the digital euro already being developed. And I would argue, and I did argue in that paper and in my presentations, that the concept is more or less the same. Like CBDC now is more or less the same as e-money in the 1990s and early 2000s. So the Bank of Finland was unique in the sense that it was one of these entities that were developing these products. The products looked very similar. They resembled each other very much. But one of them was a central bank. So the question I'm asking in the paper is, like, if you have an e-money product and it's developed by the central bank, isn't that just CBDC then? And I would argue it is. I would argue the concept is the same. And those, of course, never became very successful. Now, e-money has become an important part of the financial industry. It's a kind of tool that's being used in many ways, building different kinds of products. But it's maybe not quite the way, it didn't quite develop the way it was originally thought, that it would replace small denomination banknotes and coins, and it would be used for small transactions in everyday use. It's become something else. But now CBDC is kind of being presented again, using some of the same argumentation as e-money originally. So I think there are very interesting parallels and learnings that, maybe should be looked at a little bit more closely. For example, pre-funding, I think, is something that people hate. And the digital euro and CBDCs generally also rely on pre-funding. So you have some sort of payment app or payment instrument, and you need to pre-fund it before you can use it. And what e-money and the Avant card taught us, like the key learning from that, is that pre-funding is actually quite non-user friendly, and the liquidity management and the UX is really bad from a user point of view. So why would people now be more willing to use a pre-funded payment instrument? So that's I think a problem we'll still run into also with some of the CBDC projects.
Yeah, excellent. And that links into a very fascinating discussion about the holding limits. But we're kind of running out of time. All I can say is that please read the paper. Everybody who has any decision power in the digital euro process, again, this pre-funding is something that needs to be looked at least from my perspective. But we will just leave it there. So Paul, before we round off, did you ever see Avant Cash, or was this before your time you moved into Finland?
It was definitely before I moved into Finland, but I do recognize the yellow slot on the the ATM machines versus the blue slot, or is it the other way around? There's two slots anyway. One's yellow, one is blue. And, I know the history of that and everything else. So yeah, I mean, I've educated myself. There was a part that I wanted to go into in this discussion, but we'll run out of time, which is the whole notion of the digital euro being a digital representation of central bank liability, and therefore this whole notion of how important is it for a consumer to be able to have a digital version of a central bank liability. But I suppose that's a discussion we can have another time, and we will close out on a high note.
Yes, let's do that. Before we close, was there anything, Aleksi, that we didn't get time to talk about today that you wanted to mention in this episode?
Yeah, I mean, I think as Paul alluded to, I mean, there's lots and lots more to discuss. So I think we only scratched the surface, and it's a really interesting. All of these areas that we've been talking about are really interesting. You could go really deep down the rabbit hole, but let's do that another time.
Yeah. We're planning these kind of late night events, perhaps live on stage, where we could have a pint of beer and have a deep dive discussions into things. And I think these topics, the digital currencies, are definitely high on the list of candidates for doing episodes like that. We're also doing a live episode in the Nordic Fintech Summit in May this year in Helsinki, and we still haven't picked a topic, so let's keep that in mind. Good, but again, we are coming towards the end of the episode. Again, it's been a long discussion, but I really like this. I mean, this was a really good, even though it was just scratching the surface, it gives you a good perspective on how interesting this topic is and why I spend most of my time professionally working around these things. But good. Final thing before we close, Aleksi, how can people get in touch with you if they want to ask questions about digital currencies or payment systems?
I'm really easy to find. Just ask any crypto enthusiast. The thing is, my name is actually, as far as I know, unique. I don't think there's any other person on the planet with the same first name, surname as myself. So if you just Google Aleksi Grym, you'll find me. I'm mostly on LinkedIn, and when it comes to social media, I really don't use any other social media.
Excellent, thank you. Any final words, Paul?
Fantastically good discussion. I'm looking forward to going into this in more detail. And like everybody knows, I, just like Villa, have a deep, passionate about digital euro and where this is going. So let's continue the discussion.
Excellent. And in order for you to continue listening to this discussion, please like, subscribe, and hit notifications on if you're watching this on YouTube. As a bonus Easter egg, if you look at the YouTube episode, you will see Aleksi showing the actual Avant card on the video. So if you're just listening to the audio, you might want to, oh, there we go. We have it again on screen. So again, watch us on YouTube, find us on all the typical podcast platforms, and keep on listening and sending your feedback. We really, really appreciate it. Thank you so much for listening. This has been Fintech Daydreaming.
This is Fintech Daydreaming.